today I'm so excited because I have someone with me on this session, Swati, who's a full-time trader. And we both thought that we should talk about an interesting topic which is not discussed very often, but it has a huge role to play in psychological safety, and that is money. Um, and money matters. And the reason I say that is that because as a coach, as someone who's interested in psychology and how the mind works, in many conversations, I've come across situations where people want to embrace their dreams. They want to do so much, but there are so many inhibitions or so many dependencies on money because of which they are unable to take the decisions that they would like, be it in a relationship, be it quitting a job, um, or be it just other aspects of living a life that they want. And hence, I thought we should do a series on this topic. And I'm so glad that Swati, who's like me, interested in the psychology of money and a full time trader, so she comes with um, real practical knowledge in the space, uh, agreed to be here with me. So, Swati, would love to hear more about you and about your passion about this topic.
Right. Yeah. Thanks for having me, Manisha. Like you said, yeah, I think it's a topic that's very close to my heart, and it's something that I really go through day in and day out by because of the work that I do. So, like you said, I trade the markets for a living, and trading is as deep as you can get when it comes to money matters. And what I've come to realize is that most people believe that it's the skills, like the technical skills, that really sort of play a big role in your success as a trader or an investor, or even just a regular person having to manage money. But in my opinion, and a lot of successful investors also say the same thing, is that it's really like less than 5 or 10% is the technical knowledge, and 90%, over 90% is about the psychology behind it, right? And I kind of experience that on a daily basis. So yeah, I'm really excited to be talking about just all things psychology on money and investing and wealth building and all of that, that can sort of lead you to reach a more freer and a more fulfilled life, because I think money can really be a powerful force if really understood well. So yeah, I'm happy to be here as part of this conversation.
Thanks, Swati, and thanks for saying that uh, the technical piece is 5 to 10%. I think that would be reassuring to all of us,
Absolutely.
uh,
Yeah.
me included. Um, so, Swati, like we were discussing earlier before we got into this call, was that this is a topic that doesn't get discussed very often, or there's some discomfort around it, right? uh, about talking about it, learning in a group, because that would, if we would talk more often, we could learn from each other, we could learn in groups. But I haven't seen much of that happening. What do you think creates that discomfort?
Yeah, I find this whole aspect of finding money matters overwhelming as such an interesting case study from a purely psychological perspective. So recently I was reading this book called The Psychology of Money, written by an investor by name Morgan Housel. He speaks about how all our perceptions and beliefs and the mental models that we create about money has largely to do with the kind of exposure that we've had, like growing up. It has very little to do with the kind of formal education or the kind of skill training that you may have had when it comes to investing, and it has largely to do with the belief systems that you have developed over the years based on a lot of conscious and subconscious factors that have influenced them, right? So, like, I still remember, like, I grew up in a family where, people thought that, putting your money in the stock market is extremely risky because, and I grew up, believing that because, in general, I saw a lot of people, losing money in the stock market, right? Or it's possible that a lot of Indians believe that buying gold is very safe, and, or buying houses or like properties is a good investment because that's what they saw their parents and their grandparents do, right? So I think it has largely it's just really a function of, the kind of environment and family that you were part of. So once we understand that, then we can sort of organically progress into the practical aspects of, like by actually presenting the objective facts of what are the valid, available means for investing, and what is more relevant for our times, and, what makes more sense for the kind of goals that you may have. So these are the aspects that can then be dealt once we understand what is it that we really feel about money. Once that awareness comes in, it's easier to deal with the practical aspects, because I think now more than ever we have, a lot of transparent platforms that have made it easy to process, all that information, which kind of has been very opaque, to be honest, for the common man. It's not something that like our parents and previous generations were able to like process, so they did the best that they could. But we live in a world where all of this is more accessible, so the only important step that we need to do is to sort of reflect on the beliefs and biases that we may have towards money, and then face it objectively. Like, if you do you believe in the stock market being a place to lose money, does that have a valid ground, or is it just a feeling because, there may have been one or two incidents where, you've sort of gone through it. And even gold, right? Like, if you were to objectively look at the return of gold in the last 20 years and compare it with, to let's say, some other asset or an instrument, objectively look at whether, investing in gold is a psychological satisfaction, or does it really financially make sense? And
Mm,
whatever your findings are, then, it's easy to sort of wrap your head around it, and you don't feel overwhelmed, because now you've understood where you've come from and how much of it is fact and how much of it is perception. So I think once this exercise is done, I don't see why, this whole topic of personal finance should be, overwhelming at all.
yeah, I think you bring up such a good point, and this just kind of came to my mind as you were sharing, especially the piece about gold or property. And what came to my mind was the social influence, like, uh, like what's the current perception of a good investment? And sometimes, I think till we engage in a reflective process, like you said, it's probably um, difficult to dissociate from that perception, to be able to even do a reality check that is it factually good for me, or do I think that this is a good thing for me to do socially? That pressure also. So if we were to make a beginning to explore, what's our relationship with money, if we were to go deeper, Swati, what are what are some good ways to do it? What are some good questions to explore our relationship or our emotional quotient, with money?
Yeah, I think a good place to start is to, sort of start with understanding how we perceive risk. Like, in general, everything in life is risky, right? Choosing a career option is risky,
Yes.
choosing a partner is risky, doing whatever that we do with our money is risky. I mean, as simple as just driving down on the road is risky, right? So everything has an inherent risk associated with it, and yet we still do most of these things while being aware of the risk, because I think as humans we are naturally, like, intuitively very good risk managers. Like, we when we are given a certain situation, we understand what is the risk and what is the reward that we are likely to get for the risk that we are taking, and we make a mental call. Like all of this happens in a matter of seconds. It's not something that happens very deliberately. So we do this and arrive at the fact that, okay, this is something that I can go ahead and sort of continue doing, right? So that is definitely like a good place to start. Step one would be to understand like how each person perceives risk, right? The second aspect is that I think, in my opinion, the biggest risk of all is the risk of doing nothing. It's called the opportunity risk. Like if I were to explain that better with an example, let's say if at some point I had an amazing business idea, right? And at that point I also had a comfortable job. So maybe I did not pursue that idea enough at that point because, it just felt like too much risk, at that point in time, right? But maybe let's say after many years, I see that some other person has sort of, come up with the same idea, but they went ahead and did what they had to do. And, it's now become a successful business, right? So from my perspective, that is an opportunity cost, the cost of not acting, the cost of not doing. So I think the phrase that I'd like to leave the audience with is that sometimes risk of doing nothing is far greater than risk of doing something imperfectly. It's okay to sort of go ahead and do something, even if you don't have all the information, even if you don't have all the factors in place, because it never will be. You can never have like 100% of things in control, right? So I think that's definitely something that a lot of people overlook. And the sad part is that this opportunity risk is a very slow and silent factor. Like it doesn't instantly tell you that, you've lost this opportunity. It's like after many years, you realize, oh, I wish I had done that. It was like what I perceived as risk at that point wasn't the risk at all. So yeah, I think this definitely risk is one place that everybody should sort of get started with. And another important aspect is also to understand what money and wealth and the whole process of investing really represents to us, like on a deeper sense, right? Like does it, like maybe for some people it represents having material possessions. There's nothing wrong with it. That's also perfectly all right. Like you may want to own fancy gadgets, or you want to have a nice home or a car, or you want to travel, and a lot of those material possessions, right? And some people prefer that for them wealth represents the freedom of time and the freedom of choice. And for some others wealth represents the ability to sort of create value for people. Like you would want to sort of give back to the community. So there are really various representations of what wealth really is. So what is it to you? Like what does wealth really represent to you is another question that sort of like needs to be answered. And once we start with understanding what we perceive as risk and how much reward we are happy with, and at the end of the day, what does this whole thing mean to us, right? So just stitching all of this together can like really give some useful answers.
Yeah. So um, I think that's great, right? You gave some really good pointers, some really good questions to come face to face with what's stopping us. So taking it to the next level, let's say if we were to take baby steps, right? When it comes to baby steps in money, there's this term that often shows up, compounding, right? So would love to hear from you about how we can use or leverage the power of compounding, um, not only in terms of the math but also in terms of assurance, right? That small beginnings can really translate into um, significant amounts.
Yeah. Yeah, absolutely. I think compounding is one of the, like they call it, like one of the wonders of the world, right? It's such a powerful thing, and yet the funny part of it is that we as humans are not really hardwired to comprehend the depth of compounding. We are more attuned
Hmm.
towards linear thinking. We are like, okay, month on month, okay, there's salary coming in, and at the end of each year, there's a very small percentage of increment, and then you sort of like continue to do this for 20 years, right? So that's a very linear growth, and our minds can sort of picture that. But if I
Hmm.
were to tell you that compounding, like giving you an example of, let's say, if you were to save, if you had started saving 20,000 rupees a month when you started working, let's say when you're 25 years old, and at the age of 40, if you had invested it in any mutual fund, right, that would have turned to 3 crores, right? So that's something, the kind of figures that come up during compounding is something that humans cannot comprehend, and that makes it very easy to overlook, because it takes such a long period of time, and the major chunk of the reward comes towards the end of it. So it's just very hard for people in general to sort of naturally comprehend it. But the good news is that we can consciously wire ourselves to really understand how this whole process works, right, by understanding the math behind it. And it's essentially a principle that can be applied to not just money matters, to a lot of things in life,
Yes.
right? And I find that, like, food and health and money matters, sort of like, I can draw a lot of parallels between the two. It's not really the one-off events that really make a lot of difference, even in terms of your health. It's what you eat on a daily basis over like 10, 20, 30 years, right? That really sort of defines your health in a more sustainable way, right? I think it's the same thing with money matters as well. And just going back to the previous aspect of risk of not doing anything, I think to leverage compounding, the key step is to get started wherever you are. It's not
Hmm.
important whether you're starting early or you're late, because from any point onwards, you can start to leverage compounding. So that's good news, for people who may not have had a big head start. Sure, you may have lost a certain portion of the reward, but there is still a lot of it remaining for you to grab onto, right? So I think
Hmm.
I think the summary is that we don't always need a lot of effort or force to achieve big things. It's just
Hmm.
the little things, the month on month things that you do over like 10, 20 years in a very boring fashion, right? That kind of really adds to it in the long term. And yeah, it's if anybody looks up the secret recipe of any successful investor, for example, even Warren Buffett, right? He's worth like $85 billion now, and I think $81 billion of his net worth got added to his portfolio when he was 65 years of age. So if he had not been patient enough until that age, like 90% of his net worth has come after his age of 65, right? So that's the kind of strange behavior compounding does. So it's
Hmm.
really like, it's not his investing skills that really gave him an edge. It's really about like doing the same thing, the same boring little things over like 5 decades that really paid off for him, in the long run.
Yeah.
So yeah, so I would say that it's definitely worth sort of consciously rewiring your mind to understand how powerful compounding can be.
Yeah.
Yeah.
Yeah. I think, thank you for mentioning that and giving the example of how it worked in Warren Buffett's case, because I think we live in a world of instant gratification, and hence it's very important to take a moment to emphasize on these various aspects of compounding that you articulated so beautifully, right? One is that, we're so used to linear thinking because, I mean, yeah, we're we're used to a three-dimensional world, right? So like whatever we see is and the attention that we pay is what translates into how we comprehend. But you know, there are forms of growth which are not in sync with or the beauty of which is not being in sync with the linear piece. And the second piece was about the patience, like because these days we want everything instantly, right?
Yeah, absolutely. I think just another aspect that makes it even harder to sort of, follow compounding is that, let's say we have like two people, right? Like one person has taken the linear path and the other person is pursuing a compounding path, right? So in the initial few years, it can appear like the person who's following the linear path is doing better than the person on the compounding path. So that makes it even harder for this person to sort of stay at it and continue pursuing it. It is only after you cross a certain critical threshold, right, it just goes exponentially from there, which this linear person can never be able to catch up. But the thing is that initial area, which is called
Hmm.
as the area of latent potential, like there's a lot of potential, but the results are not really showing yet. So once you
Yeah.
cross that tipping point is when the exponential returns will begin. Most people are tempted to give up before reaching that tipping point, and that kind of breaks the whole, that powerful chain of what compounding can offer. So yeah, yeah, it's definitely hard but worth doing, for sure.
Hmm. And what are some ground rules or basics that you think we should bear in mind while embarking on this journey or even preparing for this long haul of
Yeah,
investing?
yeah, I think like I already shared, I think the first step is to just get started, like wherever you are, start small but start nonetheless, right? So that's definitely the first step. And the second step, like you summarized in the previous point, it's the secret ingredient, so to say, for successful investing in a sustainable way is patience and time. It's not investing skills, it's not about timing the market or finding a very good stock that is likely to give you a lot of returns. It's not really all of that. It's really patience and time and just pursuing what you set out to do, right? So
Mm,
that's definitely key. And I think it's also important to not come too much under the influence of like social and peer pressure, and to continue being reasonable about the kind of investing goals that each person has, right? Because each person's risk and reward appetite is unique to them and their circumstances, right? So if I were to give you a ready advice that why don't you just start investing in cryptocurrencies, right? And you
mm,
will, someone who doesn't understand how that works, and
yeah.
you're likely to fail more than you can succeed, because it doesn't fit in your model of what you are comfortable with, right? So I think being reasonable about your own investing goals and investing vision is really important. And I can't stress this enough, but life can always, like, give you a lot of surprises, and it's like very essential to never compromise on things like having life insurance or medical insurance, and emergency funds, right? Most of the times we sort of always feel like if something is going well right now, it feels like this will continue forever. Like, we tend to extrapolate our current circumstances into the future, right? Which is not always the case. So yeah, it's really essential to account for things that at this point might seem like it can never happen, but it happens more often than not. So it's really good practice to be prepared for that. And another aspect is that nothing nothing worth having in life comes easy, right? So
Mm,
everything requires a certain price to be paid, and that price can come in various shapes and forms. So especially when it comes to money matters, and once the whole process of investing has been started, it sometimes can feel like a bit of a compromise, because you're not really getting the return out of it immediately, right? Like if you use the same money and maybe travel to a place, or had a good lunch at a restaurant, right? Like there's that instant return on the money that you've spent,
Yeah.
so you're happy about it. But if you were to divert the same money into a mutual fund, which basically will give you a return at some point in the future, it's very difficult to sort of accept that at that point. And it's normal to feel that way. What can be done at that point is to sort of go back to the questions that we spoke about initially, right? Like, why are we doing this in the first place? It's like, what is the long term vision? And sort of connecting back to those motivations can bring you back into in a course corrected fashion, and continue in the path that you've set out, right? And I think the most my most favorite way to look at money and the whole like process of investing and everything is that it should lead everybody to a place of greater and higher life values, like happiness and fulfillment and peace of
Freedom.
mind, freedom, and just the joy of doing the process, and not really focusing too much on the outcome itself, right? Like that's what most spiritual teachings also tell you, that like
Right.
it's you should be enjoying the process, and if you're not, then there's something wrong. And you sort of like have to go back and really revisit what needs to change, so you can also start enjoying the process, and not just look at it like, okay, this just seems like a sacrifice, and it's just something that I don't resonate with, right? So I think that's kind of why I also love digging deeper into psychology, is because of these things. Many times during the investing journey, you tend to question why you're doing this. You tend to question that, the returns are not even that great. Why am I doing this? So I think it really helps if you can connect the outcome to like things like happiness and freedom and fulfillment, rather than the absolute value of returns. So changing the way that you look at wealth can sort of
Yeah.
help in making it sustainable for the long run.
Hmm.
I
I
think
think,
that's
yeah,
yeah.
that makes so much sense. And while you were saying, Swati, I really kind of um, had this insight on how when we don't look at finance in isolation, it becomes, or rather, it has the potential uh, to become a way of life, just like exercise, right? Like something that we do every day. So when, rather than beginning with money, like you said, the why piece comes in when one has a fairly clear idea of how one wants to live. What are the priorities, what are certain values. Like, let's say for me, freedom is a big piece, you know and um, that enables me to make that connection, that okay, what, financial freedom is closely linked to other areas of freedom in my life. And like you said, right, freedom in terms of time, right? Not only doing what you love to do, but um, doing it in a way such that there's no pressure of time, because that's what enables you to bring out the best. And if one is always pressurized that I have to do this because I have to earn this much, then I think you may be doing what you love, but you still not be able to enjoy it that much. Um, and so I think having that life vision, having a strong reason as to why you want to do it, has the potential to help us integrate it with our daily lives. Um, and what I mean by that is that I think I love reading a little bit about money every day, or um, listening to maybe a YouTube video, a podcast, an audio book about money, because I believe that I understand my goals the best, and hence I can manage my money in the best way, even if it takes me time, you know, to learn that. And I think that makes the journey more interesting, because I think, that ties in with learning, that ties in with really um, feeling, I wouldn't say in control, but owning, really owning it rather than outsourcing it to someone. And I'm not saying we shouldn't take help, but I'm saying that just being invested in investments, you know,
Yeah, absolutely.
and enjoying it. Um,
Yeah.
so, what helped me make a big thing was, Swati, talking to um, friends uh, about it, right? Like, I had, we've been having conversations about it for quite some time, right? Over a year or so. And, I've learned from you, I've learned from, other dear friends. There's, one friend of mine who will also be a part of this series. And, we discuss it often. And that initiated me into learning about money, like reading on my own. What do you think are some other ways of making a beginning? So that's how I got my confidence, right? That, okay, I have people who I can discuss this with, I have the safe space. But that's just me. Having been in this space, what do you think are good first steps to start learning?
Yeah, I think for me, I completely resonate with what you shared. I think just, talking more openly about what we know and what we don't know and what we'd like to learn is actually a good way to, get started with anything in life, right? Like if I were to like learn some new skill, and if I found that there's another person who is doing it, better than I am, then I'd love to, sort of go and learn that from them, right? And most of the times, I mean 99% of the times, people are more than happy to help and offer and share what they already know, right? So it's most of the times our own hesitation and fear of sort of getting judged, that I can't believe you did not know this until now, or nobody ever really says that. It's all in our minds, so I think just going out there and having conversations in a vulnerable yet a strong way, right? Like I see being vulnerable as a sign of strength. Like it's always good to say what you don't know, then it's clear, at least aware of the fact that you don't know something, so then that can be fixed. Fixing is easy, awareness is the harder part. So yeah, I would say that do little things on a daily basis, like you covered, just picking up any investing book, or just reading articles online, or even like getting started by opening a trading account and buying like one share, right? Like that also can sometimes, it's the fact that, oh my god, I need to invest such a large sum of money, that can seem overwhelming. But once you've bought one share, then you understand the process, you know how to do it, like then it's just scaling that and repeating the same process by changing the numbers. So I think the initial inertia of getting started is taken care of. So yeah, I think it's just get started from wherever you are, and trust the universe to sort of guide you as you go along, because that always happens.
Yes.
I'm a big believer of that. So yeah.
Yes.
Yeah.
And I think you brought up the point about vulnerability, Swati, and I'm so grateful that you did. Um, and many times, like, there's this fear of being judged. And I feel that we can always choose who we are being vulnerable with. So,
Absolutely.
so I think that's another piece that we do, have the control over, because like you said, there are people who we know who are happy to help, and who we have this equation with, who understand us. So it's not like, just kind of, not that we are making ourselves vulnerable to anyone, but there are like safe spaces that each of us have. um,
Absolutely.
So,
Yeah.
Swati, when you were making your beginning, and I know you've written an article, which I would love to link with this video, but if you could just share a little bit about, how you made your, like, how you got comfortable with it in the beginning. Was there any inhibitions that you had? And if yes, how did you get over them?
Yeah, no, that has been a very interesting journey for me. I think it was really about like getting started. Like I was someone who always believed that I need to know everything before I really get into something. Like I need to have all the information in hand, right? But then I'm also the person who is big on feeling intuitively, right? So this was one of those incidents where I sort of went down the intuitive path, because I think that's another topic in itself. But
Yes.
there was just something that told me that risk of not taking up this opportunity is going to cost me very dearly at a later point in time. So I think I made this switch in the hope of making it work without having a lot of information, because the drive was, like you said, I wanted freedom in life, and I wanted to have the ability to say that I know what I want to do, and I would want to do it the way I want to do it without anybody
Hmm.
telling me deliver this product, or send me this email, send out these reports. That is a place where I felt like I was not really expanding myself and really exploring what I had to offer to the world, right? And I feel that that is happening a lot these days. Like we're all stuck in such frameworks, like very
Hmm.
limiting frameworks, where we believe that our entire identity revolves around this framework, right? But there's actually so much more once you come out of that framework, and it just suddenly feels like a lot of creative dimensions got unleashed. So that's precisely what happened. But initially the first 3 to 6 months was hard, mostly because, like we spoke about earlier in the video, that I think once you sort of get used to a certain financial standing, and your lifestyle kind of changes along with that, it's very difficult to let that go and say that what, I'm going to start from scratch, and I'm okay to not have all of these things, privileges and benefits that I had in my past life, so that I can get to a better place. It's just that transitionary phase that can be really hard and psychologically very difficult, because each time that I did not make, let's say, as much as I was making in a corporate job, I would just question myself. It's like, why am I doing this? Is it really worth doing? Right? And each time I asked myself that, I kind of went back to the answer that yes, it's worth doing, because I'm not doing this for the money. I'm doing it for the freedom that it's giving me, for
Hmm.
the independence and autonomy that it's giving me. So I think that helped me continue, going in this path. And once I crossed that critical threshold, like I described, after that it's just been great. So I think it was really the initial switchover.
Hmm.
And like you said, I had people who sort of formed my safe space, and they really helped me along, and supported me, even though they didn't understand it, because I don't really come from a family of a lot of stock market investors or traders. So just trusting your decisions, which are made from a place of values rather than just the practical aspects, can really I mean, it has to work out. There is no reason why it shouldn't. So yeah, I think I have, like, my life has been a testimony to sort of this validating this theory of basing your decisions on values more than the practical aspects of things. So yeah.
And freedom is, I think freedom is a powerful one, right? Like,
Absolutely.
among the values.
Yeah, absolutely. I personally feel that it's the highest form of wealth one can pursue,
Yes.
the freedom of time and freedom of choice, both.
Yes.
So I think money can buy both of that. And that's a common denominator for most humans, because in general we are free wills, right? Like we
Yes.
are free beings, and that's our natural state. So yeah, for sure, I think that's definitely a powerful thing. And I really urge anybody who's like, whoever is watching this video, to sort of dig deeper into this whole aspect of finding your place of what freedom looks like, and just go get it after that. Yeah.
Mm. And Swati, again, another fear is that, okay, I have to have a lot to invest. So,
Oh yeah.
so if you can give an example, um, and I don't know if it's possible, but it just came to my mind right now, that is it possible to give an example of how little you can begin with in terms of investing? Because when I was exploring these, platforms that enable us to invest in shares, I saw that denominations are such that you can begin with like as little as 500, and I think that's
Yeah.
their SIPs. So would be, but again, you are in that space. So if you could give a sense of how little one can begin with, I think that would be encouraging to a lot, a lot of viewers.
Yeah, absolutely. I think even now, after having been in the markets for a few years now, even now, when I have to sort of develop a new system or a new methodology for trading, I start with the smallest denomination that is available, because I'm still learning how to, deploy the system. So learning essentially never stops. So I am essentially at the same level as any beginner. It's just that I am a beginner with respect to a certain niche topic, and another person could just be a beginner in general, right? So essentially we're both starting from scratch, and the most logical thing to do is to do it in the smallest way possible, because first it's important to develop confidence and that kind of trust and belief in the system. Because I remember you shared that I sort of paid for this mutual fund, but it doesn't seem to be reflecting in my,
Yes.
how does it, so just the
Correct.
process technicalities, right? That also is important. Like we don't talk about that enough. So if one can just start with 500 rupees and just leave that invested for, let's say, one month, right? And then you can go back to see how much this 500 rupees has become, and how does one withdraw it when necessary. So if you've done all of this process flow flush, right, with just a small amount, it gives you a sense of confidence that, okay, I know how to do it. Now the point is to just get more money and do it. That's the only hurdle left for a person. So yeah, I think even now I'm big on starting small and doing it for a period of time where I am comfortable doing it with, right? And no amount is really small. Like it's
Yes.
all relative, like I might be an insignificant investor to, let's say, compared to somebody like Ambani, or like the Tatas and all that, right?
Yes.
And but as compared to another person who is probably struggling to just put in 500 rupees, so they may feel like I'm at a great place, right? So each person, it's all relative. There
Relative.
is no good or bad or big or small in an absolute sense whatsoever, right?
Yes.
There are millions of participants in the markets, and no matter how big your capital is, you're still insignificant in the larger scheme of things. So yeah, I think that's definitely like a good piece of advice to start small, for sure.
Yeah, thanks, Swati. And um, you know, just wanted to share a quick experience. I was doing two things simultaneously. So I was learning gardening, and learning as in, I mean, just trying different things on my own, growing my own, little vegetables for the kitchen, or herbs and all of that. And then we sow the seeds, right? For some time, nothing is visible on the surface, right? So every morning I would go and check that, acha, like, is anything showing up? And they are most, for quite a few days there was nothing, and then suddenly, I kind of saw the leaves, and then like it was just such a joyful moment. And then likewise on the dashboard when you go, I feel that compared to gardening, where for some time you don't know what's happening, I think these days the platforms are so good that every day you know, you see a change. And even if that change is so small, I think it to me was it was as satisfying as seeing those leaves, you know, that growth. And I love how technology has enabled this transparency and the visibility that we have to what's happening with the money. And yeah, when we don't have like like when people newbies like me start on a Saturday Sunday when I think things are closed, um that's a part of the learning that yeah.
For sure. Yeah.
Swati, thank you so much. I think this was just so enlightening. I learned so much, and I'm sure everyone watching this would would have learned a lot, felt encouraged to take the first step. And yeah, we would love to read your article, so I'll link that below. And yeah, thanks so much, Swati.
Yeah, no, thank you so much, Manisha, for having me. I thoroughly enjoyed this conversation. It's something that I really, really, love talking to people more about, and I think we definitely need more of these conversations. So I'm really grateful that you thought of me, and yeah, thank you so much once again.
Yeah, and I'd like to close with one of your sentences that I really liked, which I think is a great punchline. And what you said just now was, "I'm big on starting small." So I think
Yeah,
that's a great way to conclude that. Hey, let's get big on starting small. Let's get moving, and um, let's take some of those risks which we may later see as opportunities.
absolutely, absolutely,
Yeah.
yes.
Okay, thank you. And yeah, please leave us your comments, your success stories, your questions. And Swati and I are definitely going to take a look and answer if any. And yeah, would love to hear from you all. Thank you.